Good morning, everybody. Um, I'm going to do a little video here about what you can do. I had a lot of interest in people wanting to get started in this, or at least start trying to learn it. And of course, the FTC requires that I put up this disclaimer for risk disclosure. Trading futures involves a significant amount of risk. And that's one of the reasons I think it's very safe to do it with a prop firm, because you have automatic shutdowns. If something goes wrong, you're not going to lose any real of your real money. And if you start trading with real money and you're not familiar with putting stop losses in and all of that stuff, you can lose more than you deposited in your account. So it's very important that you don't do that. Um, Trading security futures contracts involves risks that may potentially be unlimited losses. Yeah, it can be very, very bad. You can lose. You can be down hundreds of thousands of dollars if you're not careful. So don't get involved with real money. We're going to do this in a paper trading account through TradingView, and then we'll move on to possibly a prop firm later on. Don't do it with your real money. Let me get out of this and let's go into what we can do to trade futures. Okay, it's going to be a PowerPoint. I'm a teacher, so PowerPoint's my thing. What are futures is one of the things we're going to cover. Why we want to trade futures instead of stocks. Some of the key vocabulary that I use, and contracts and sizes, and what can you do to get started. So first, we're going to cover what are futures. Futures are contracts. The futures contracts are derivatives of an underlying instrument. There are many types. I'm going to be talking about the S&P 500. You can Google the rest. There's multiple different kinds. The S&P 500 is a group of U.S. companies. There's 500 of them. The largest companies traded on the open market by their market cap. You'll recognize some of the names like Tesla and Amazon and Nike, but there's others like Nvidia. It's been popular, been in the news here lately, but it just recently made it onto the S&P 500 last year, I believe. AbbVie, probably not one you heard of, or Danaher, but they're on there too. There's 500 of them, and most of them are not household names. The futures contract is based on the price of the S&P 500, which is the actual unit that's traded. So then the futures would be trying to figure out what that thing will be in the future. That's why they call it futures contracts. And these contracts run for 3 months and then they roll over. Some of them are deliverable, some of them are not. Why trade futures instead of stocks? Well, I got involved with stocks first. And you can have a news story. Well, let me just go down the list. The reason I trade futures instead of stocks is because stocks require real folding money. I did use money originally when I started trading with futures, and I lost it because I didn't know what I was doing. And then got involved in stocks, and I made some money with stocks, doing the penny stocks and stuff. But I didn't hold on to it because I couldn't duplicate what I was doing still, because I didn't know what I was doing. With stocks, there's a pattern day trader rule. So if you wanted to trade 5 days a week, you have to have $25,000 in your account minimum to trade them. I can trade a micro futures account with just $100. And with prop firms that you can get involved now, you don't even need $100. They evaluate you through a paper trading account. You just pay them a monthly fee. It ranges anywhere. Some of them charge $100. The top step, their cheapest one is $50, but they run specials all the time where you can get it for $20. I think Veterans Day they were doing it for $11. So you can get it a lot cheaper than that. The news, that's one of the things. Whenever you're trading a stock, something can happen, like the CEO steps down, or a Tesla crashes and catches fire, and that stock will drop 25% in the blink of an eye. With futures contracts, it's a little bit, you got a little hedge against that. There's 500 companies, so one company's bad news report isn't going to affect the entire S&P 500. But that one stock, you'll lose a lot of money on it, and it may not come back for months. It may come back the next day. You never know. With futures, you have scheduled news events. The things that hit you the most are CPI, PPI, housing starts, when the Fed speaks, but it's all scheduled. It's on a calendar. You know it's coming, and you can just avoid trading during that time. And you can do that. You can do this with some stocks, but not all stocks. But with futures, it's very simple. You just click buy or sell. You can make money no matter which direction the price is going. So if there's a strong run down, you can sell short. If there's a strong run up, you can buy and go, what they call it, going long. Selling is going short, buying is going long. Okay. Key vocabulary for these things: a tick. A tick is the minimal movement of price. For the S&P 500, one tick is 25 cents. On the E-mini contract is $12.50 per tick. On the micro, it's $1.25 per tick. The reason they call this the E-mini is because there used to be a bigger one, but now that one's been erased, and this was the only one you can trade. Points. A point is a full dollar movement. So we're looking at 25 cents. 4 ticks would be a full dollar movement. To get, and each of those would be $12.50. So a full point on the S&P 500 is $50. Another word that some people will say, if you hear other people talking about, is they'll call it a handle. The point and a handle is the same thing. The contract is the unit you buy when you buy futures. It's sometimes referred to as cons or lots. For several years, trading futures was only available to the wealthiest investors. The full-size contract was 5 times the S&P 500. To make it more available to the masses, the E-mini was created, and it's 1/5 of the original. The E-mini is the most traded futures contract in the world. Micro E-mini is one that's even smaller than that. It's 1/10 of the size of the E-mini, and that makes it available for me. You know, I've thrown $250 into a micro account or into a regular brokerage account and just traded the micros. And you know, you can get in there with the right strategy. You can actually do pretty well. You can make $500-600 a month, maybe even more if you're getting big moves. A minimum margin for the E-mini on the brokerage I have is $500 during day trading. And for the micro, it's only $50. So you have to have, I would say, minimum $100 in there to trade, because as soon as you take that trade on, if it starts going against you, it's going to affect your margin, and you have to keep at least $50 in there, or they'll liquidate you. All futures instruments, whether it be crude or gold or whatever, most of them have a micro version. So what can you do to get started? Getting started is very easy. I recommend doing it on a paper trading account until you're seeing consistent profit. There is no substitute for chart time. You're going to have to find time to watch the charts move and learn and recognize the patterns that I'm teaching you. I recommend watching the charts between 10 and 11 a.m. New York time. If you're here in Texas, that's 9 to 10 a.m. If you can't get in front of the charts during that hour, you can purchase a market replay plan. I don't like TradingViews that well just because it shows the full bar instead of showing the bar forming. I use one from Tradevate that has a much better replay, but it costs $50 a month. And then another thing you can do is watch my videos on fair value gaps and learn to see them in real time. Anyway, we'll go to playlists, and there's a start here. I'm just going to see if I click on that. It's going to show all of them. So yeah, this will show you how to get onto the TradingView. It'll show you how to get onto the TradingView website and create your own paper trading account. So that's the first one you need to look at. And then view playlist, that's what I need to do. And then the fair value gaps video, it's going to show you those as well. You can see one forming right there. So those are the two. That's what I would recommend doing. Get your free paper trading account, learn to spot these fair value gaps, and then try to get into the market between 9 and 10 Texas time each day, 10 and 11 New York, and just see if you can spot them and start doing paper trading. I worked with my nephew on this yesterday. Let's see if I can. That's DXY. This one is the one you need to, that is tradable from a free account. It's called the S&P 500 CFD. If you hit the red button, it sells it short. Let's do it. And I did 50 because that's going to be close to a tick value on the S&P 500. So it'll give you pretty close to the monetary amount. This one won't let you set static stop losses and take profits, which I don't really like. But on a stop loss, you'd want to put it above the fair value gap. $4,000, I must be on a daily chart. Let's go to a 5-minute chart. Okay. I don't know if I took a good trade here or not, but it's just for the purposes of this video. And this is my paper trading account. The way, once you're on here, you have to log in to it. But right here, you can see paper trading. And let's see, if you scroll it up, whenever you're in there, it'll allow you to log in to where you need to get to this paper trading. But you got to be logged in order to take trades. So that's still way too much on the stop loss, but that's the way you do it. So you do that, and then I'm working a strategy where I only do $250 a trade. It's a 5-point move. It's pretty common. And with that $250, if you can capture that each day, that's $5,000 a month. That'll replace most people's jobs. Or dang sure gets you a nice secondary income. But that's the basics of it. The fair value gaps I'm not going to go into on this video. You'll have to watch the other one. Close that out. Thank you for watching. I hope that helps some of you that are trying to get started in it, why I trade them. It doesn't have to be very complicated. The things I'm showing you is like a streamlined version. I've been through every possible trading system you can imagine. I've got spreadsheet after spreadsheet of market data and journaling that I've done. And I'm telling you, this system right here is the most streamlined in 4 years that I've ever seen. And it's actually made me consistently profitable. And that's the key to any trading. Trust the system. Get in there and learn it. And the sky will be the limit for you. I really, truly believe that. I love y'all. Be kind to yourself and be kind to one another. I'll see you next time.